Thank you for tuning in to episode 241 of This Week in Real Estate, the T-Wire podcast, broadcast live Wednesday, July 26, 2023. Housing market freeze. Oh no. I've got the sound playing in the background. Okay, there it goes. This episode was brought to you just by listeners like you. We don't have any way for you to give me some money yet. So all I want you to do is just take a second to share the show, send it to another real estate professional or somebody in the industry that you think needs to know what the heck is going on. Is the Fed going to raise rates or aren't they? We're covering that at the end of the show today. If you're joining us on YouTube, you can comment and we could display your comment live and we could talk about you or talk about your comment. Just like Olivier said, he said, where's Matt? So slow. Yeah, Matt is not first today. So there he is. So thank you guys for joining there. You can also comment live on Facebook or LinkedIn and we can display your comments that way. But most of the chat, I have to say, is on YouTube. That's definitely the place to go if you want to do the text chat. But look, Brian Hershey, a buddy of mine, he's back. What's up, Brian? Yeah, we'll talk about your question in just a second. He's on LinkedIn. If you're on Clubhouse, you can join the conversation. Raise your hand. One of our moderators will check you out. Make sure you're a real person. And then you can add to the conversation vocally, audio. Anyway, we'll hear your voice. So this podcast was created so that you guys would have one place to go to find the latest real estate news and headlines with succinct professional analysis from those of us who are still active in the field. That's right. We got real players today. And we got some of my favorite people in the world are going to be joining us. So first up, we have another bearded man of real estate, Mr. Bobby Tompkins. What's up, Bob?
Hey, Ray. How we doing, man?
Good. Thanks for joining me today.
It's good to be here.
And since Bob and I are both idiots, we also wanted to add someone that is a little smarter. So we also have Anthony Mosley in the house. What's up, Anthony?
What's going on? It must be the beard thing. I'm lacking, but maybe that's makes
true.
up for intelligence. I don't know.
Yeah, maybe a little bit. We'll see how it goes.
Fair enough.
Well, these two cats are real estate agents active in their field. Bob is in South Carolina. What part of South Carolina? Tell everybody where you are.
Halfway between Greenville and Anderson, South Carolina. So generally the upstate.
There you go. The upstate of South Carolina. And Bob has a YouTube channel. What's your YouTube channel name?
Living in South Carolina.
Living in SC. For those of you who are in the business and real estate agents, he gets a ton of leads from that. So you got to check out some of our masterminds that we go over that stuff. And we also have Anthony Mosley, who is a real estate agent in Arkansas. He's in Northwest Arkansas. So I'm in like the middle of the state. He's in the northwest corner of the state, famous for being the headquarters of Walmart, Tyson, JB Hunt, some big dog companies. So Anthony, you have a YouTube channel too, right?
I do. It's called Living in Bentonville.
Man, great
you
mind.
guys are creative. Yeah, Brian Hershey said that Bob is in asterisk bottom Carolina. That's good. I like that. The Gamecocks. So, but both these guys get a lot of their business and deals from YouTube. So if you're interested in that stuff, you guys can hit me up on Instagram. I'm Razor back there. If you want to come to some of our masterminds where we dive into this, I'm happy to invite you there if you're a real estate agent. But like I said, I am Ray. I'm a real estate agent in the middle of Arkansas. Our show spans the entire globe. If you go east or west, all the way around to South Carolina, but we also have listeners from around the world. I think we're still in the top 20 news commentary podcast in Taiwan. So that's yeah, I have no idea why, but we keep rating real high over there. So okay, I'll take it. Maybe there's a bunch of investors. So we have a lot to talk about. I'm going to give you guys an overview and then we can just kind of dive right into the first story because we have a lot to talk about before we get to the Fed rate hike at the very end of the show today at 1:00. We're going to be talking about that. We're going to be talking about June home sales, mortgage demand, interest rates, how they've shaped the economy, home prices, what's going on with those. We have a 10-year rally, but is it going to hold up? Is it going to stay? And then we're going to talk about the NAR magazine. Did you guys get your Realtor magazine this month?
I think I did.
Right on the cover of the Realtor magazine, talks about the inventory issue. There it goes. Not enough housing is what it says. So we'll talk about what NAR has to say about it and what they're doing in the cover article. Then we will talk about Zillow breaking laws in South Carolina. What?
Riveting.
So Bob has the inside take on this. We were talking about it in a mastermind the other day, and Bob said something about Zillow breaking laws. And you guys know we've talked about it on the show before, and in states with these MLS laws and display and all this stuff. We'll get to the details later. But everyone that I've ever looked at, everyone thinks they're breaking the law, and then when I look at the law in detail, it is clearly not. So I was like, Bob, it's probably clearly not. Like there's always this little loophole, and I talked to Bob about it, and Bob was like, that loophole is not in South Carolina. They're breaking the law. So we're going to talk about that and see exactly what's going on. We'll talk about CoStar. They're trying to overtake Zillow. And at the very end, if we get to it, there's some new tools for the Compass folks, part of our industry tea. So we'll talk about that. Olivier say, breaking the law? Impossible. So he's French. So. Matt Lamarche, he's everywhere. Matt is on LinkedIn. He's also on YouTube, and then he's also joining us on Clubhouse. So what's up, Matt? Thanks for joining us literally everywhere. Howard Harold Broadsley is from Israel. He got here before Matt also. What's up, Howard? All right, so let's jump into this first article. Matt, were you going to say something, or were you just going to say hi?
Yeah, I'm trying to figure out, Olivia, did we take offense that when he said some of my favorite people are going to be here, that we were already here? Are we still favorite people, or have we been demoted?
Favorite people you are. I said some of my favorite people are going to be here. That also, I was actually only talking about y'all, Matt. I was not talking about Bob and Anthony, despite.
Okay.
Yeah, you're good. All right. So this first article is CNBC. June home sales drop to the slowest pace in 14 years as supply chokes the market. So this one is on CBC. Sales of pre-owned home dropped 3.3% in June compared with May, running seasonally adjusted annualized rate of 4.16 units, according to the National Association of Realtors. Compared with June of last year, sales were 18.9% lower. That's the sales pace for June since 2009. We're getting close to those crash years, fellas. The continued weakness of the housing market is not for lack of demand. It's about a critical shortage of supply. There are just 1.8 million homes for sale at the end of June. That's 13.6% less than June. And at the current sales pace, that represents the 3.1 month supply. So one of the comparisons on these numbers that I thought was interesting, it said the sales were 18.9% lower, but the supply was only 13.6% lower. So it is showing a bit of a slowdown in the market as a whole, it's not an even switch of, if the supply drops, the sales drop the same amount, the sales are dropping more. Lawrence Yun, he's the chief economist for the Realtors. He said there simply isn't enough homes for sale. The market can easily absorb a doubling of inventory. All right, Bob, what's this mean for the market as a whole?
Well, I mean, I don't
trouble.
I don't know if we're in trouble. I don't think we're in trouble because, if more homes are built, then we're going to be good. If interest rates come down a little bit, then we'd be in trouble. If interest rates start coming down, that is, I think, the one thing that would lead to a big problem right now in the market because, where rates are and where supply is, you can kind of see where there's kind of a balance in the decrease of home sales and home inventory. It'd be interesting because they'd have to, if rates went down real low, then people would start selling again, but we know that's not going to happen. So I don't know. It is a weird market to try and give a good opinion on.
Anthony, what are you guys seeing? And I know in Northwest Arkansas, it's a little hotter than Central Arkansas. Stuff's turning a little bit quicker. Is inventory still so far behind that you could go with a doubling and be fine?
Yeah, it is very much so. So there's only 999 active properties on the market in Northwest Arkansas. Actually, that's just Benton County. Forgive me. But still 43% of those are new construction, which means that new construction is trying to
Wow.
stay, trying to keep pace, but nearly half of the homes that are active on the market right now are new construction. So people aren't selling their existing properties.
We talked about that a little bit last week too, that the builders were super happy. The builder sentiment went up last week. And we discussed how there's one economist that was like, will new homes being built solve the inventory crisis? No. Like, well, I mean, not alone, but that's a pretty good start. Like you got to have more inventory from somewhere. So let's talk about new homes being built. Let's talk about foreclosures, those homes coming back on the market. I think it's going to have to be a multi-pronged approach. But there's another article about the mortgage rate. So we know that the Fed is going to be most likely raising rates. We know that there's 2 interest rate hikes planned from now until the end of the year. Is that going to be today, or is that going to be in the next one? So we'll have to wait and see. But the latest mortgage rate, the mortgage demand drops as interest rates remain stubbornly high. So interest rates continue to stay high, and the Fed is not the Fed is not helping that. Mortgage rates didn't move last week and are still sitting near recent highs, with home prices continuing to rise. That pushed more potential home buyers to the sidelines. The total mortgage application volume dropped 1.8% last week compared with the previous week, and that includes refis and applications to purchase. But the applications for a mortgage to purchase a home dropped 3% for the week and were 23% lower than the same week a year ago. So we have one article that tells us that the number of home sales is down 18%. Another article is telling us that the applications to purchase in the upcoming month were down 23%. So it doesn't look like there's going to be a uptick in the market. Joel Kahn, he's the Mortgage Bankers Association's economist. He said that the decrease in the FHA purchase applications contributed to an increase in the overall average loan size. So I saw another commentator talking about how affordability is the worst because you have the increase in prices and there's some kind of collusion happening that's forcing sellers to keep their prices high despite buyers trying to buy. And basically, it was just misreading statistics. The decrease in the FHA purchase applications, which is usually the bottom 1/3 of the market, is increased. So is decreased. So that increased the loan size, if that makes sense. So there's fewer sales happening in this bottom 1/3. So you're going to see the average loan size, the median loan size, begin to go up. He said applications to refinance a home were essentially flat. So they really didn't move. I'm still surprised that people are refining. I said last week, I wonder if people are refining, taking money out, and then doing a remodel because they're not moving. So Bob, your clients that are looking to buy a house, what are they thinking about the rates? What are they voicing to you? Is any concerns, or are they like, oh crap, oh well, it's 7, let's go?
I mean, I think because we deal with so many relocating clients on our end, that demographic does not really care. They're like, oh, it kind of sucks that we're going to have to do it, but we want to leave whatever state we're coming from, or we have to move, so we don't really have an option. But I mean, my sphere of influence stuff, the stuff that I built the first 5 years of my career on, my phone's silent with those people. Like they have no interest in moving right now. If they already bought a house, they're like, hey, I'm good with my rate. So I do have a couple of them that have reached out to me about refinancing, really to put money back into the house. So I'd imagine it's more like a second mortgage or a HELOC or that sort of thing that they're doing. But it is slow for people that live in town. They're just like, oh, it's not worth it to move right now just because of where rates are.
Yeah, Olivier said you need more affordable inventory. That's the problem. So do you think, Bob, if homes were more affordable, that they would be just kind of looking past the rate as an issue and saying, well, I feel like I can get a deal. Let's go.
I mean, in some situations, I don't think for a lot of younger first-time home buyers, the general price isn't going to matter as much because they've got to take a loan out. So, I mean, they're going to be paying that interest rate regardless. I mean, sure, if it's a lower loan amount, that's always going to help. But, you'd have to cut prices 40% to get them to where the payments were a year and a half ago. So it's not like we're not going to see that. That's just not going to happen. I would say if you go back 2 years ago, houses were incredibly affordable, but that was dictated by the rate. Because affordability is not just price; it's price and rate. It's what's the monthly payment going to come down to, not what's the total price of the home.
Yeah. 2 years ago, about this time, Susie Orman came out and said that you shouldn't buy a house until the market turns and homes are worth half of what they were that day. And I specifically took issue and put out a video. Still my number one video right now. But I'm going to say that not only was she wrong, she was so wrong that people who listened to her missed a lifetime opportunity to get a great home at a great rate and watch the market skyrocket their equity. I mean, they literally just lost money by listening to her.
Yeah. I mean, I bought my house in 2021 and was more than happy to do it. 2.625 is phenomenal.
Yeah. Yeah. And plus you have 2 years of price increases of about 24%. That ain't bad. You're sitting with some great equity now.
Yeah. Susie sounds like an idiot right now.
Anthony, what about your buyers? Northwest Arkansas, are they deterred by the interest rates? Are they slowing down at all? Are they asking a lot of questions about it? Or are they gung-ho?
Yeah, I would honestly echo what Bob was saying, is that over 75% of my personal business is coming from out of town, looking to move to Northwest Arkansas to get away from Colorado, California, Texas, Florida, and they're wanting to come to Middle America. And they've got so much equity in their home, they can sell their 1-bed, 1-bath, $2 million home and then come buy a 3,200 square foot house on a half an acre. But, to your point though, exactly, I would agree 100%, Bob. It's not necessarily about the affordability of the home or the rate is what the rate is. I don't think people want home ownership to let a mortgage rate be their hurdle. Yeah, it's something that's there, but if they really want a house, that's the expense to get there. Whether it's 7 or 4% or 2%, like we were able to get in the 2020 range. Yeah, me as well. Bought fall of 2020. But I was just doing some research for my YouTube channel. To your point about equity gain, the average home in Northwest Arkansas sold Q2 of 2020 for just under $300,000. This quarter, 3 years later, it was just over $400,000. So $100,000 increase in 3 years. So yeah, Susie Horman's an idiot.
New show title. What do you guys think is driving the move to y'all's areas? Why are there so many people relocating to our areas?
Ray, I've got a whole YouTube video you can watch on that. But if you're asking me the answer right here, it's for our area. It's affordability. It's opportunity. What can people do in Colorado and California? Is they can go mountain biking. Well, you can go mountain biking here in Northwest Arkansas on some of the best trails ever. But you can take your equity position and maybe even retire early.
I think one of the big drivers is taxes. When you look at property taxes compared to some of these other states that people are moving from, because they're dealing with higher prices, they're dealing with higher interest rates, but they're also dealing with higher taxes. And I know a lot of people love Texas, but look, you go get a $700,000 home in Texas, you're paying $10,000 worth of property taxes in the year, and in South Carolina, you're going to pay $3,000. So it ends up being a big difference. And I think Arkansas is probably pretty similar to that.
Yeah, I'm getting a lot of people moving here for political reasons as well, and they're not bashful about telling me about it. They're coming from the coast into Middle America, and they're basically saying we want to live here for taxes. They like the taxes, they love the affordability, as you mentioned, Anthony. But the third reason I usually hear is usually politics. They want to be kind of left alone. And they're looking for places where they can do that, kind of get out of the city. Julie Moon says that she has people that are moving to be closer to their children or moving to be closer to their parents. People who are getting divorced and people who are getting married. So people are making decisions about moving not based on the rate, but on life situations and life circumstances. Jatteridge said that he joined in time to hear, quote, Susie Orman is an idiot. It's perfect. He suggests climate migration. Yeah, that we get that too. Our climate can be a little brutal in the summer. It gets pretty warm here. And it's the
just
humidity.
Played a round of golf, and I wish I hadn't have.
Because the humidity? Yeah.
So
the humidity is real, especially in an El Nino year. The humidity gets really hot. So, but we only have that for like 2 weeks, maybe 3 weeks, and then it's really nice. And then in the winter, we have like 2 or 3 weeks of brutal winter, and then it's really nice. So I like our climate because we get to feel those intense moments, and it makes you appreciate a generally moderate climate that we have other than that. Nico, what's up? He says, love that. The rate is what it is. Olivier said that up north, he said after our last hike up north, he's in Canada, they are now saying probably no rate decrease until the end of 2024, early 2025. 6 or 7% is probably going to stick around longer than expected. Now, in America, very different in Canada, but in America, if they were just to leave it all, then over time, the rate would start to trickle down. If the Fed left its funds rate where it is, then the rate would still kind of continue to trickle down depending on what's happening in the economy. The problem is the economy really blasted off and with zero rates for so long. People expanded like crazy and they were still hiring. And if you're still hiring, people have money to order more stuff. And if people are ordering more stuff, then there's a run on stuff, which creates inflationary pressure and the price on stuff goes up. So the Fed has to raise rates so that there's less money in the economy, so that tracks, so that people off. And so what you're looking for a sign that the economy is doing better is that there's people that get laid off, which sounds backwards.
Yeah.
Wonderful.
But that will prevent inflation from continually going up. Now, if the economy is stubborn and keeps growing, then you're going to continue to see more inflation and the rates are going to remain high. I don't think it does seem like expansion has slowed. As I was listening to the analysts this morning when I was getting ready, many of them were saying that the rates are still high, but it does seem to be working. That the inflationary pressures, recessionary pressures has slowed a bit, and there were any kind of major moves by the Fed will kind of put us in that correction/recession time period. BLDG Realty, what's up, Mike? Mike says, start farming new construction, homes closed post September 22nd. They won't have the anxiety of giving up a super low mortgage.
It's true. They're already at that mentality of that rate.
Yeah, very true. And the new still sell very, very well compared to the resale homes because people are looking for that kind of quality. Speaking of low rates, there's an article that I just kind of wanted to hit on. We're not going to spend that much time on it, but let me share this tab instead. It says 15 years of low rates has reshaped the economy. Here's what's changing as rates stay higher for longer. The Federal Reserve kept its benchmark rate near economists call the effective lower bound for the better part of 15 years. Low interest rates in some cases distort the basic assumptions of personal finance and business. It's basically a mindset issue, shifting how investors calculate risk. The Federal Reserve, in the midst of its fastest interest rate hike cycle in the modern era, is setting up the U.S. economy for conditions not seen in generations. So basically, this article goes more into the mismatch between what people think and then what is happening. Mm-hmm. And the reason why there's a mismatch between what people think and what is happening is because rates were so low for so long that they got used to it. So how a whole generation of people learned to manage their finances was through super low rates. So now that we're in a super high rate environment, they're looking around saying, well, now what do we do? And of course, our moms and dads are like, when I bought my first house, it was 18%, and the young guns are like, what a terrible investment. And they're like, well, we built equity and then we sold it 30 years later for triple its value. So I think there's just going to be a paradigm shift in how long people keep houses, which means that we will have to get to pre-crash building rate. I can remember in 2006 when people were moving every 3 years, 2 years, people were moving so fast. They would buy a house and then sell it and buy another house and sell it, buy another, and they would just buy a bigger house. There's that 2-year rule that you had to stay in your home 2 years to avoid some taxes and such. So they were buying a house, staying there for 2 years, then getting that house and buying another one, taking their equity out. And there were so many homes going up. Everyone with a white pickup truck and a flip phone was a contractor. And it was like the glory days of building because everyone could get a loan. No doc, stated income loans were a thing. And everyone could get the money to buy it, build it, or every guy with a pickup truck could build it. And so you had this kind of, I guess, this perfect storm happening. And when all of that fell apart, because the people who were not supposed to be getting loans were getting loans,
Right.
the builders have slowed down and have never picked up the pace. Builders that were doing 100 homes a year to this day are doing 5 homes a year.
Mm-hmm.
And because they don't have to do 100 to maintain their lifestyle, they were doing 100 to get all their workers a different lifestyle and to get their family a lifestyle. But to maintain their lifestyle, they only got to do 5. And they're not going to get into a position where they go belly up on a development again. So are you guys starting to see an increase in, I know the builder sentiment's starting to go up, but are you seeing a rapid increase in the number of homes being built in your area? Because I think that's the only thing that's going to help.
For us, I mean, I would say the only main driver on why builders are building more here is because there's so much growth to the area. So they know they can depend on that. And I would imagine in markets where there's not the same sort of growth, there's not that same sort of builder initiative. Because here, I mean, they could build a lot more homes if they wanted to, but it really just seems like they're keeping up with the pace of growth around my area.
Yeah, 34 net families are moving to Northwest Arkansas every day. So builders just can't keep up with the growth. Combine the growth with, not pacing population growth, not just people moving here, but just people that are here already that are having more and more families, traditional family. It's almost double what it was 2 years ago.
Wow. Well, that's good. I mean, I think that's going to be maybe offer a little reprieve. But what Lawrence Yun said, we could have a doubling of inventory and still be okay.
Yeah.
So just the builders doubling what they produce is not a doubling of inventory. That's just on the new home side, which is generally a lower portion, as Anthony said, is 43%, which is higher than it has been lately. Well, one of the things that continue to build builder confidence is when prices stay high.
That's true.
Home prices continue to climb with striking regional differences, says S&P Case-Shiller. Prices nationally rose 0.7% month to month, seasonally adjusted. The 10-city composite index fell 1% year over year, slightly less than a 1.1 decrease. The 20-city composite dropped 1.7% in the same time, and since the annual decline in April. So prices rose nationally 0.7, but they dropped in the 10 and 20 city composite index. Home prices, this is a quote from Craig Lazar, managing director of the S&P DJI. Home prices in the U.S. begin to fall for June 2022, and May's data bolster the case that the final month of decline was January 2023. Granted, the last 4 months, price gains could be truncated by increase in mortgage rates or general economic weakness, but the breadth and strength of May's report are consistent with an optimistic view for future months. Lazar noted, however, the regions continue to be striking, with cities in the so-called Rust Belt outperforming the rest of the nation. Prices in Chicago gained 4.6%, Cleveland 3.9%, New York 3.5%, making it top performers. The Midwest took over the South's reign as the strongest region. Quote, if it seems like an unusual occurrence to you, it seems that way to me too. It's been 5 years to a month since cold weather city has held the top spot, and that was Seattle. So that's an interesting difference too. I mean, we talked about the climate migration, and Olivier, he says climate migration is interesting. Imagine moving to a ski mountain or lake. Will it still be there in 15 years? It's climate change migration. But it is interesting to see colder climate states, colder climate areas are starting to gain in home price, which shows there's more demand there. Hannah Jones, research analyst for Realtor.com. This is the last quote, and then you guys can pontificate. The housing market remains unaffordable for many buyers, but some areas are seeing high levels of competition as a result of low inventory. Limited existing home stock means that markets are seeing competition reminiscent of the last few years.
Mm-hmm.
So here's my main question that wasn't answered. Are we seeing the Rust Belt gain in favorability or gain in home price because there are fewer builders building there and there's still a bigger inventory issue? Or is there more demand there? And in the bigger cities, you have some big builders that are out there that are starting to produce that's actually bringing down home prices.
Where's
That's
the
the
Rust
question.
Belt?
What'd you say, Anthony?
Where's the Rust Belt?
Oh, I'll show you a map.
Well, it's like Oklahoma, right?
I think Oklahoma is part of it. Yes. Where is the Rust Belt? We'll look at a map of
I suppose I could have Googled it as well.
All right. Oh no, it's not Oklahoma. It's way up there, where the iron.
Really?
Yeah. All right, I'll share my screen. Here we are.
Oh.
The Rust Belt of the United States of America, the Rust Belt area. For the audio listeners, it looks like
People
it's
are moving to Pittsburgh.
Ohio, Southern Michigan.
Yeah, it looks like it's a little bit of Illinois, and it goes into Indiana, Ohio, parts of Michigan, which you're real familiar with that, Anthony.
I am.
And a little bit of Pittsburgh up towards Buffalo, Rochester, and Syracuse, New York. So that's the Rust Belt.
Never thought I'd see Cleveland and Detroit on a list.
Wrong list.
Well, maybe it's the ability that Olivier said earlier that you have to have more affordable housing options. So it could be the affordable housing options pushing more people there, so that even if home prices increase 10 to 20% in some of those areas, it's still so much cheaper than the coast of California or in the middle of New York.
True. Looks more like a lake effect snow map, but I get it.
I don't even know what that is.
Lake effect snow?
I mean, I know what it is, but
maybe another
I'm
day.
in Arkansas. We don't even. Okay, well, that's kind of near. That's more near you than it is us, I think, Bob. Are you getting a lot of New Yorkers moved into your area?
Not as many as I would have expected.
Huh.
We get a lot of West Coasters.
Mm-hmm.
We get a lot of West Coasters. And then we actually get a fair amount of people from like Austin, Texas.
Interesting.
It's a big market that moves
Austin
here.
home prices are huge. I mean, they're way high, but they're also going down right now. Austin specifically. Jason Bates says the property taxes there are high. Are you talking about the Rust Belt or New York? It could be. It looks like, if we relook at this map, I wonder how much of the Rust Belt migration is from a city like New York, where people are like, I want to move. I don't want to change my location in the Northeast, but I don't want to live in the most populated city in the world or country. So I'm just going to go a little bit outside. Let's find a smaller place out in, East New York, Pennsylvania, Ohio. I wonder how much of that is that kind of migration out that way. I don't know. We may never know.
So, I mean, you could have people that are used to big city sort of lifestyle, and they want to go to what they perceive as another big city that has the same amenities they're used to.
Yeah, and even if property taxes were high there, they're still not what they were in New York.
Right.
Portland, what's up? Jen, she's here. She says lots of folks in Oregon moving to Pittsburgh and Detroit, young creatives buying buildings. So we did see, let me go up to my friend Brian's question if he's still stuck in DFW. He asked this question earlier. I'm stuck in DFW. Can I put the entire gate, specifically B3 through B18, on Zillow for sale? You actually can. Have you guys seen those weird Zillow listings? It's like there's kids for their senior prank put their school on Zillow for sale. And it was on there for a couple of days until Zillow's TOS removed it. So I would actually be anxious for you to try that, Brian. I think you should do that, and you could upload pictures. You could even use your cell phone to do a 360 tour of the place while you're there. That would be epic, and then you can send it to me. I'll send it to the broke agent. but I'm saying that to say we also have stories of people buying schools and office buildings in places like Detroit, and then remodeling them for residential housing. So there is some moves like that are happening where people are getting creative. You could buy a whole office building for what a home in California cost. So there are some people getting pretty creative with that kind of thing, trying to solve some housing issues. So maybe it is some young creatives buying cool buildings. Let me get to this next article. We are 20 minutes away from the Fed's announcement, so you guys hang tight. I lost my article list. Here it is. Okay, so next there's a 10-year rally in home prices. Oh, we just talked about. Oh no. So how long is the home price rally going to last? The guy Robert Schiller, I think he's one of the guys that he's a professor at Yale. I think he's one of the guys that predicted the last downturn, which I feel like every economist that was kind of alive during that time period was like, I'm one of the economists that predicted the downturn. That he may actually be, but Robert Schiller says home prices could be coming to an end. So a 10-year rally in home prices could be coming to an end. I was about to say the homes are still going to have a price. A decade-long rally in U.S. home prices could finally come to an end once the Federal Reserve stops its rate hike cycle. Home prices have made steady gains since 2012, according to the S&P Case-Shiller Home Price National Index. He says, quote, the fear of interest rate increases has influenced people's thinking, and it's not just the homeowners, it's new buyers who want to get in before interest rates went up even more. They want to lock in, so that's been positive influence on the market, but it's coming to an end. Schiller noted that the index reflected unusual behavior in the last 6 months, saying prices seem to be fine and then start to go up. He says, I think people want to know how to make the what is the Fed going to do situation. People don't know what to make of the what is the Fed going to do situation. We've seen a dramatic increase in interest rates since a couple of years ago, and I think there's a sense that that's enough, said the professor. He said that he's not panicking, saying part of a recent spike in home prices is, quote, just seasonal. So what do you think is going to trigger the end to the home price increases? Is it going to end, or are home prices going to continue to go up just at a slower pace?
I mean, I like to look back to look forward. And if you look back for 30 years, prices continue to go up. I mean, it may slow down on a percentage scale. 24% increases aren't sustainable,
No.
so it'll come back down. I mean, hopefully we land around a 3 to 5 percentage point appreciation every year, which is kind of historically normal.
Seems normal. So you're saying it would return from these crazy things just to normal? It's not going to reverse course?
I'd be surprised if it reverses course. With the amount of inflation that's happened in the overall market, like it would be crazy to see homes be devalued that much against the dollar.
Mm-hmm.
But Anthony will see that because he's in a more popular location. People have just bought crazy priced homes up there. Surely you're going to see a correction.
I don't believe so, at least not for the foreseeable future.
Yeah.
And mark my words, this is being recorded, I'm sure. But
it is. We are being recorded for those
fantastic.
of you who, yeah.
I don't foresee that, but an analogy of like what you were saying, Bob, is we've been driving down the highway at 120 miles an hour. We're just now slowing down to 65. We're still going in the right direction. We're not turning around going the other way. We're just now what's feeling now normal.
Yeah.
Right. And so I think that when you're going to have, what's the news articles that are saying, oh, there's a 150% increase in foreclosures? Yeah, because there weren't any last year. Right. So now taking that and going into the future, yeah, there's going to be pockets and regionally that do very well, like Northwest Arkansas is going to continue to do well because it's desirability. But I don't think that homes are going to crash, bubble burst. I really don't believe so because lack of inventory.
Yeah.
Until inventory starts.
That's why I brought up Austin, Texas. If you talk to somebody from Austin, they'll tell you the market crashed. I mean, it's like the market has, I think it's already started to come back down. And you've already seen that. But in the hot markets, like we're not seeing, like we haven't seen that or felt that. It's going to level off probably across the country.
Sure.
The average appreciation across the country is going to level off. But you're like you said, there's still going to be pockets that just blow up, and there's going to be pockets that don't.
Yeah. It's a reshuffling. Ever since people were sent home and could work from home, it's been a reshuffling that no one can quite figure out. We don't know if so many businesses are going to be calling people back into the office because they're not meeting the productivity levels that they once were. We don't know how many of those buildings are going to be like, you don't have to come back into the office. We're just going to give this building back to the bank, and then the commercial kind of tightens up. We don't know for sure how many of those commercial properties are going to be converted to residential. Thus freeing up people that actually need inventory to build it, to live in these really cool office buildings. I was actually on Christina Smallhorn's channel Sunday, and we talked a lot about this. And she made a good point. She said it's so cost prohibitive to retrofit a lot of these office buildings. And Jack, by the way, Jack Atteridge, if you're still here, I told her about your quote about the 30% of these office buildings actually being available for these. But one of the things we talked about were all the retrofits that would be needed from, you're going from a couple of people on a floor flushing every couple of minutes to everyone having their own bathroom and everyone having their own shower. So, that additional water and waste going through that single building's pipe, plus going now into the city's sewer system, that could create a nightmare. So there's a lot of infrastructure that has to be adjusted. It's not just like, how do you reconfigure a room? It's actual infrastructure. So it's going to be so cost prohibitive for many of these buildings to do this. And they're going to be in such prime real estate locations that the person that's going to live in that is the person that owns the floor. It's going to be a luxury complex. And that doesn't do anything for your average person that needs a house. So it's still going to be short on inventory, no matter what's happening there. So I'm with you guys. I don't think I would compare it to like a drag race, right? I would say 2006 and 7, people were in a drag racer and they floored it, and the car had some issues, and at the end of the race, instead of slowing down, the whole thing came apart. Whereas nowadays, the market is relatively strong. Both the economy and also the average borrower is so much stronger than they were. There's not the foreclosures there were back in those time periods. And so now you're in a drag race car that's going to do really well. It's going to stay together, and you're going to hammer it, which we've hammered it in the last couple of years. And now people are just taking the foot off the gas a little bit. And what happens in most drag races? Well, the car slowly comes to a stop. So I think the homes, the appreciation is going to continue to a normalized rate. And once we find that normalized rate, it's just going to sit there. The problem is if interest rates get down to 5.5% before more inventory is added, you are going to see another 24 to 50% increase in home prices, because 78% of buyers are waiting for 5.5%.
Yep.
So that's what we're telling our buyers who are looking at the 7% going, well, what if rates don't go down? Well, if rates don't go down, you've bought at the most recent low rate. So if you want a house, buy a house. If rates do go down, you're going to have the ability to refi, plus you'd have equity built in, because inventory is going to take 2 to 3 to 4 years to solve. Speaking of inventory, one of the things we know is that the National Association of Realtors has the cure. Let's look at what they're saying. This was in all your realtor magazines, real estate agents who were watching. Bold action needed, it says. This article was published July 19th, and it is the cover story of the Realtor Mag. I actually really like the art they used on that. It's kind of cool looking. You live with changes every day: low inventory, high prices, and more recently, rising interest rates likely cut into buyers' spending power. Soaring rents and other factors make it difficult for people to save to their first home. Meanwhile, local regulations combined with material labor shortages are suppressing the production of new homes. Estimates are the housing supply shortage ranged from 4 million to 6 million units. That's huge. As a result of these factors, housing affordability has reached historic lows. As of April 2023, only 23% of listings were affordable to households earning a median income of $75,000 or lower. Compounding the challenge, America's decades-old housing finance system doesn't meet the new demands. I'm going to go on the front lines. It talks about the political and practical complexity of housing production. There's a lot of energy at the state level around housing policy, which is exciting to see. I don't know what energy does, but there's energy around it. They're really excited about that. Abundant, diverse housing to accommodate the increase in demand and work from home. So I'm reading this. A body of policy is emerging in the cities and states nationwide that we believe will best approaches the combined sticks, carrots, and new resources. All of the offer slightly different models, both in policy design and political framing. So they're trying to attack the supply side issue. I'm wholeheartedly supporting. And the way they're going about it is essentially saying, okay, we have these cities and these states with these different rules and restrictive zoning. How do we get rid of these barriers to allow more homes to be built? So it's interesting that the National Association of Realtors is actually going to bat for the National Association of Home Builders. And I'm assuming they're going to be partnering with them in this endeavor, but they're trying to get realtors involved at the city and state level to change zoning restrictions and things that prevent people from building a home, or the ADUs. Like California just went to allow ADUs almost everywhere. So that is definitely going to help their supply. Where's the last quote on this? Buyers have faced a trifecta, historically low. Oh, okay. So then it goes into buyers. So that is currently the solve that they're attempting. And I want to cover that supply side first. What other things do you think that realtors can do, builders can do, citizens that want to be involved and get more supply into their city? What do you think people can do to encourage more supply side inventory?
I think one of the things they could do is maybe allow different forms of construction materials, or maybe somebody's out there inventing something that is a lot easier to put together than waiting for more trees to grow, or steel. Maybe that's why people are moving to the Rust Belt, is because they know steel is another opportunity to build. But I think combined with, changing zoning restrictions and laws in regards to where or how much house you can build on a property, ADUs, accessory dwelling unit for those that don't know what that is. But the opportunity to say, hey, this area that's maybe unincorporated, let's start building those out of, I don't know, bamboo. Bamboo is probably not sustainable either, but anyway.
Somebody big bamboo. You can build it out of bamboo.
I just did. Somebody said bamboo is what we're building with now.
Take a look at this. So this is not available in the U.S. because of rules and restrictions on how homes are built. But this is called block. These little blocks that they're using to build houses with, and they basically. It's kind of the boring part of the video, is showing the guy drill a hole and place a screw. But you could see how these things are placed on top and fit together, almost like Legos. So there's these little plywood boxes with foam in the middle. I love the idea of alternative materials, even like train cars that have been converted. There's a lot of lenders that won't give loans on that, and a lot of cities that won't allow those types of homes to be built. But I loved this idea of alternative building methods and materials that different cities and states could use to maybe allow homes to be built faster.
Yeah, I mean, the biggest thing with that, though, is it's all going to come down to, county councils, city councils, legislation. I mean, it's going to have to be allowed. And so probably the biggest thing anybody can do is show up to your county board meetings, your city board meetings, call your representatives. The real fun, sexy stuff to do is what you're going to have to do if you want to see change.
Yeah. I said last week on the show, it's not going to be one email.
No. It's got to be a lot of people doing it over a long period of time.
Yeah. Let's see, Bill G. He said Mike says completely dependent on recession or no recession. If we go into relatively deep inflation, I think you'll see more transactions, but a rate of increase will slow down or reverse. He says a recession will increase the inventory and tamper demand, giving us more balance. No recession, then the values stay on the same pace. I agree. Julie Moon, the Georgia Bulldog fan, says, Matt LaMarche, can you imagine how much it's going to cost to live in Athens, Georgia after we three-peat? Oh my gosh, they're already on it.
Right.
They're already on it. 3D printing. That's also Ian of Austin showed a neighborhood view, actually a drone view of a neighborhood that was being 3D printed. So that 3D printing is also a great idea. Yeah, somebody else said 3D printed homes. So the 3D printed homes are, I wish I could find let me see if I can find a company that does that. The 3D printed homes are like these giant 3D printers, but instead of the little plastic stuff, it's concrete. Here's 9 examples of, I don't know if this is any good, but we'll see if this resource, this is what it looks like. So you can see where it's just like a giant 3D printer spout, but instead of plastic, it's concrete. You have these ribbed sides.
That's pretty neat.
There's a 3D printed biohouse from the University of Maine. Let's see if we can watch it go. So this one is different material. This one does look like the little plastic bits, doesn't it? It's the same kind of
it's bigger.
Supported hollow walls and images, supported hollow walls and angles. It looks cool.
Ray, I had just sent you another panel type of thing that's being developed right now about panels that are insulated, waterproof, mold-proof, fireproof up to a certain thing, but it's going to allow build time framing to be cut down dramatically to be able to stand up a house a lot quicker. But man, 3D printed home's going to do well within a state of Arkansas where we get 40 tornadoes a year.
39, but
39,
yes, you're right.
I apologize.
Yeah, 39. Yeah, that's interesting. Let me see if I can play this without that. Hopefully the audio's not going to come through.
Oh, I have no idea what that video.
So this is a very similar to that thing, isn't it? Where you have a piece of wood on the outside and like a styrofoam insert in the middle. I love that. I think is that on the coast though? They have hurricanes on the coast, so that's in Hawaii. So if that's built to withstand Hawaiian winds and tropical storms, then it should fare well on the hurricane or on the tornado side. So yeah, I like this idea. I think that's a winning proposition and one that wasn't really mentioned in the article. The other part of the article from the Realtor magazine was all about housing finance system for all, making it easier for people to get financing, redressing discrimination hurdles, making it easier for everyone to get financing. Then they talk a little bit about making homes more affordable, which the only way to do that is to lower the price. So I'm not sure that they have a firm grasp on what we need to do. So one of the things that you could do as a real estate agent, if you're watching the show or listening to the podcast, reach out to your local board, reach out to a contact at NAR and say, hey, have you guys thought of trying to stress some alternative materials here? Or, I think that's probably better idea. Like get rid of the restrictive rules and laws that are maybe outdated building codes that say you need to build this with a 2x4. Why do I need to build it with a 2x4 when there are other stronger products there? And why won't a lender give a loan to a metal building? I think those are the types of things we need to ask because there's definitely a market for it. Mm-hmm. Okay, and we got 4 minutes, man. 4 minutes, and the Fed is going to launch into his rate hike, most likely. So I want to cover this because, Bob, you say Zillow is breaking the law in
I do.
South Carolina.
I do.
So, and the way they're breaking the law in South Carolina, everybody, is by displaying an agent's. So Zillow is a broker. Okay, they're a broker in almost every state, I think. They're displaying agents' listings on their website without permission from the seller or necessarily from the listing agent.
So
right?
it's well, hold on. It's actually it's a little more nuanced than that.
Okay.
Because technically,
take us through it.
Technically, there's permission from the listing agent or the seller in the listing agreement. However, the way South Carolina's law is written, it was never amended for the marketing of homes on the internet, which means that a broker cannot, in the state of South Carolina, market any other brokerage's listings. So Zillow, as a broker, cannot market any other brokerage's listings period. So IDX feeds technically in the state of South Carolina are illegal because that's what Zillow is doing.
Wow.
And
Yes.
they can't do that here because it's kind of, I was having this conversation the other day. It's like, well, they have permission from the seller. And it's like, yeah, let's say me and Ray had an agreement to distribute cocaine. It does not matter because the law says we can't do that.
Let's
Even
not
if
tell
I
everybody
gave
about
him
our commitment,
permission
okay?
to do it. You know, it doesn't matter that I gave him permission to sell it. Does not matter. That's what Zillow is dealing with here, but it's also what every real estate agent is dealing with here. And there's been a lot of conversation in the state of South Carolina recently amongst agents about being able to market other listings, even with a seller's permission or whatever. And the state is actually given guidance that, per the law, you have to have a signed listing agreement to have any sort of marketing anywhere on a house.
Not that, and this is the difference in this law and most others, not that there is a signed listing agreement signed between the agent and a broker, but that you who are marketing the property has a signed listing agreement with that seller.
That is how the South Carolina law is written.
This is the rule in question. It says E1, it says a licensee may not advertise, market, or offer to conduct a real estate transaction involving real estate owned in whole or in part by another person without first obtaining a written listing agreement between the property owner and the real estate brokerage firm with whom the licensee is associated.
Yep.
Dun,
And
dun, dun.
you have that second section which addresses the internet, but it does not allow for marketing without a signed listing agreement. So and I've talked to like 3 different attorneys in the state about it, and they're all like, yeah, you can't do it. But it's created an interesting dilemma for a lot of agents in the state when they're looking at how they market online.
Yeah, I mean, and that's really where the disagreement came from, because this is not a new rule, which is part of the problem. But what happened was, and I've seen this not only in South Carolina, but around the country, agents are setting up a home preview. They go and look at this big, beautiful house. And while they're there, they do a couple of TikTok dances and then do a home tour. And then they publish it on their social media. They didn't have an intended buyer. They didn't get permission from the seller to market the home. They didn't get permission from the listing agent or broker to market the home. And so now there's like an uproar over it. So that's why it's being cracked down on. And as you crank down on these rules, you have to do it evenly across the board. So and one of the things I did, because, I have another motive for finding out this with all these states, but I called the MLS and I was like, what's your take on this? And he was like, well, the MLS, the IDX is the only way that it's allowed. But just like Bob says, just because the listing agent has an agreement to put it on the IDX and feed it to all these other things, the law still says that can't happen. So it's a really interesting juxtaposition that Zillow
they've essentially made the exception for IDX feeds, even though it's not written into the law.
Yeah, it's become custom, but it's an illegal custom.
Yep. So it's interesting because it's like we're being told, especially within our own brokerage, it's like, hey, if you don't have a signed listing agreement, like, don't do it.
Yeah.
And it's like, don't market anything. I'm like, even if the seller says I can. So it's interesting because it's like essentially that's the same permission that's been given to Zillow. It's like the seller said you could.
Well, what's really wild about that is any kind of new company everybody's out to get. And so I think what they know is someone will try to use you as an example, because I know they will be like, oh, let's crack down on this guy. So it's an example for everyone. Okay.
I hope they choose me. Because I will sue. I will sue.
Are you gonna sue? You're gonna sue them back?
Sue everyone. I'm gonna sue everyone. Right.
Oh my gosh. Uh-oh.
What does that music mean?
Breaking news from This Week in Real Estate. All right, the Fed has come to an agreement. Here it is. The Fed approves a rate hike that takes interest rates to its highest level in more than 22 years. The Federal Reserve on Wednesday approved a much anticipated rate hike that takes the benchmark borrower's cost to their highest level in more than 22 years. In a move that financial markets had completely priced in, the central bank's Federal Open Market Committee raised its funds rate by a quarter percentage point to a target range of 5.25 to 5.5. The midpoint of that target range would be the highest level for a benchmark rate since early 2001. All right, so the rate hike is in. This is going to be great for you guys to just jump off of the show and then tell everybody you know, because everyone's going to want to know, what did the Fed do? The bigger question that I have is that, what does this mean? You heard the sentence that I kind of laughed at. It was like, this is the biggest move ever, that the markets have already priced in. So it has been completely priced in. And the reason why is because the unprecedented foreshadowing of 2 more rate hikes that the Fed said last time. The only other change to note in the statement was an upgrade of economic growth to moderate from modest. Did you know moderate was an upgrade from modest? Despite the expectations for at least a mild recession ahead, the statement again described inflation as elevated and job gains as robust. And remember, if job gains are robust and inflation is elevated, they will continue to increase the pace at which they raise rates. So they know that there's 2 more coming. This is the one. So we know that we're going to have 1 more coming this year. The question is what's going to happen after that? And then what's going to be the impact on the housing market from this rate? No, I'm asking you.
I'm going to defer to Anthony.
Yeah, Anthony's a smart one. What's going to happen, Anthony?
This is where the beard ran out. I think that's it.
That's what she said.
I don't know what that means, but
I'm at a loss for words. The rate is what the rate is. Let's go buy some houses.
I mean, I think the key is that phrase, it's already been priced in. So the markets have already taken it into account. There's not going to be significant moves. As a matter of fact, the stock markets were going up. I don't think that's going to change much. The rate's not going to change overnight a whole bunch. It's still going to just remain where it is, stubbornly high. I think we'll continue to see that. So I don't think it's going to be much of a difference. Mike said the presser after is what will move the markets. Yeah, if he mentions anything weird in the presser, if he has a weird comment or statement that's not in line with the market's expectations, that's what's going to move stuff. But the second quarter GDP growth is tracking at a 2.4% annualized rate. So GDP rose 2% for the first quarter. So we still have really slow growth in the economy. It's growth, but it's slow growth.
Mm-hmm.
Back on the IDX topic, Julie Moon said, do any of the South Carolina brokerages use IDX feeds? Or only Zillow?
Every single one.
Yeah, everyone.
It
was our title for that segment, Julie Moon, was admittedly a little bit disingenuous because it's not only Zillow, which is breaking the law, but it's every real estate agent who is a broker in that area that displays anyone's listing on their website. So
yeah. South Carolina literally wrote that law in the 1980s and didn't amend it ever. So
dun dun dun. All right, the last thing I want to cover, and then I'll let you guys go. CoStar posts a profitable Q2 as real estate portals tally record traffic. So CoStar has been on the heels of Zillow for a long time. They have said that they are the friendly version of a Zillow, basically friendly to real estate agents. I use HomeSnap, which is a pretty great product in my opinion for showing properties. We switched to that because when Zillow bought Showing Time, that means that I'm giving my information I'm giving my clients information straight to Zillow, and I would just rather not. And even if somebody's like, oh, it's a separate database, totally separate companies. Yeah, I mean, they could hire a VA somewhere to be like, bloop, oops, accidents happen. We merged the databases, can't be undone. Oh, well. So I don't even want to take the risk. But if any brokerage was out there that started a home showing service, like if Crylike was like, hey guys, we have this really incredible home showing service, I'd be like, that's great for you and your agents. I'm not using it. I'm going to use something that's independent. So that's why we use HomeSnap. CoStar posts profitable Q2. They have a whole bunch of different properties from, I think they own apartments.com, homes.com. There's a couple of others. But in addition, CoStar earned $101 million in profit in the second quarter of the year. That's up 20% compared to the same period in 2022. And remember, CoStar, their main platform is for commercial real estate, and they're still having a banner year, even though commercial real estate is a little bit dicey. Achieving these results despite commercial property transactions plummeting 63% in the second quarter demonstrates the resilience of our platforms. That's pretty impressive. I think it also shows some diversification. It says, I'm very encouraged by the progress we're making with our homes.com strategy, and our traffic growth continues ahead of our initial expectations. Do you guys use CoStar for anything?
Nope.
I actually just signed up with Crexy, which is their commercial competitor, just to test it out because we need to prospect some multifamily. And
I search on Crexy all the time. So yeah, I guess I use CoStar.
Well, Crexy is CoStar's competitor. So use the opposite.
Then I don't use CoStar.
You don't use CoStar at all.
I use their competitor.
Their competitor is like a third of the price, and supposedly they have better owner data. So if you need to mine the owner data in order to find properties for your investors or something like that, which that's what we're going to use. So we're going to test it out for a year, see how it goes. All right. Well, that's the show for today. Thank you guys for joining me. Before y'all duck out, why don't you tell everybody where they can find you? Bob, where can people connect with you after this?
Instagram at Bob Tompkins Realtor. And then also check out the Full Disclosure podcast on your podcast player.
Full Disclosure podcast. Who's the Full Disclosure podcast, Bobby?
Me and Brad McCallum.
It's a revamp of the Bob and Brad show.
Revamp. Yeah. So we started it back last week. So
awesome.
Yeah.
Good job.
Thanks.
Anthony, where can people locate you, man?
People can find me on Instagram as well. Moving with Mosley is my handle. It's my Moving with Anthony Mosley, Moving with Mosley, or YouTube, Living in Bentonville.
Cool. And you guys can find me at Ray Zorback. That's RayZorback. As my shirt says, call me. It's got a hog on it. It's called those hogs Woo Pig Suey.
Woo Pig Suey.
Thanks everybody for joining us. Thanks so much for all the comments. Sorry I couldn't get to everybody today. We had a ton to cover. But I really appreciate you guys sticking around, and we will see you next week.